From Europe's plans to increase defense spending to key US inflation numbers, these are the stories to watch in business and finance in the coming week. Faced with Russia's war in Ukraine and fears of US isolationism, European leaders have backed plans for more defense spending. The significance is not lost on markets. The euro and shares are surging, so are German bond yields as investors bet more spending means more borrowing. Suddenly, the US lead in long-term trend growth is no longer a given, and investors are re-rating European assets. Global growth concerns have shot back onto the market's radar as weakening US data and growing trade tensions hurt consumer confidence and business activity. Even second-tier US data will be closely watched, while the Bank of Canada could cut rates when it meets on Wednesday. While US President Donald Trump suspended the 25% tariffs he imposed on most goods from Canada and Mexico, his fluctuating trade policy continues to fan worries about inflation growth. Morgan Stanley warned that Trump's tariffs on China, Mexico, and Canada could slow growth in the US and Canada and push Mexico into recession. Wednesday's US consumer price report could fan investor fears about still warm inflation, just as Trump's tariffs on key trading partners could provide a jolt to domestic prices. January CPI jumped 0.5%, the biggest gain since August 2023. Another hot reading could confound recent bets on more Federal Reserve rate cuts this year. On Trump's list of tariff targets, China stands out, not least for how well its markets have weathered the tumult. China's central bank has deftly guided the yuan in a stable range against the dollar, and Hong Kong's Hang Seng Index is up 21% this year, making it the best performing major global market. And that's without the kind of reprieves that Washington has afforded Ottawa and Mexico City. Inflation figures and loan data in the coming days will offer the latest reading of the consumer pulse.